Hello, everyone. This is Christian with National Private Lending. We are a direct private money lender for investment properties. Our products are tailor-made for real estate investors. And today, I'm going to talk to you about um, our new construction loans. Lately, we had a lot of our clients looking to get into new construction, and there is a lot of new developers out there that new and seasoned developers actually they're looking to um, get going with their construction projects. So it's been a very popular um, product lately. So I just wanted to kind of give you an idea or how our program works. So our new construction property financing, our construction loans provide uh, builders and investors the financing they need for ground up construction and then acquisition. Okay, here are some of the key factors about our new construction loans. Uh, the key factors about our new construction loans is that they're ideal for ready and infill tear down and spec homes in urban areas. What that means is that as of right now, with this type of product, we're not talking about land development yet. Okay, so these are specifically for lots within a city, inside a city, a neighborhood that is a lot that is ready to um, build, or if they have a house in there and you can tear down the property and put up the new one, right? But as long as the lot is build ready, is not for tract home projects or new subdivisions, right? So new subdivisions are for that. We'll talk about on another video. We'll talk about land development and doing subdivisions. Okay, this is for anywhere from one to up to five properties that you can that you're doing new construction in build ready lots. Okay. um the mid construction financing is also available for these type of loans, meaning that if you are already started with your project, with your construction project, and you're running out of money or you're kind of short to finish, then we can finance, we can grab the project right in the middle and finance everything already that you already paid, plus the items that you need to finish. Okay. Including the land. Um, these loans are available for single family and multi-family properties. Okay, so they're usually for between 12 to 18 months on a case by cases. Okay, the purpose of these loans are again for ground up construction and for developers and investors building anywhere from one to five properties at a time. Okay, now if you already have the experience and you been building in the last few years, then we can push that up into 10, 15 properties depending on how many are you looking to build at any given time. Okay, the lot financing can also be included, only if, in this case, only if the lots are build ready condition. Okay. Uh, the loan amounts and terms for these type of loans are, we do minimum loans amount of $50,000. This is loan amount. Okay, that will be including land and construction, but I'm sure that you know building a home, it will cost a little bit more than that. Right? So, and then the maximum loan amount that we do on this particular program is $5 million. Terms are usually 12 months on a standard, right? So most of our builders are taking around 6 months to build a home, and a month or two sometimes to sell. um, but we have options, with extensions if you need to go over the 12 months, or if it's a larger construction, multifamily type of deal, 2 to 4 units, we can do 18 months, if that's what you need. The experience that we require for these type of loans are usually a minimum of 2 properties already built before as experience, or at least 1 rehab, meaning like 1 fix and flip that you completed and you sold. Okay, so that's pretty easy. A lot of people want to jump directly into new construction, but they don't have the experience in new construction. So my suggestion, my recommendation is usually let's do a fix and flip, a quick fix and flip first, just to kind of get your feet wet into what it looks like, construction and everything, and then from there you can jump right into new construction, right? The experience as a general contractor, if you're a general contractor or a real estate broker, and you've been investing in the last few years, whether you've been fixing flipping properties um, uh, or managing projects, or you have a few rental properties that you acquire, um, renovated and hold them. Those are things that also we take into account, with take into consideration that, as part of your experience. Okay. Now the LTV or LTC that we finance usually is up to 70% of the LTV. This goes up as your experience goes up, right? Or if you're already experienced, then your LTV could be higher. So there's options that we can push it depending on the equity, depending on the after repair value, of the after construction value. uh, uh, we can go up to 85 sometimes of the loan to cost, right? So now, but if you're new and what you kind of looking to get started, at least you're going to get 70% of LTV. If the project, if at that time um, if at the time of the financing, the project has already have the permits, we can push it to 75. If the project doesn't have any permits yet, it will be only about 60%. So definitely, when you're looking to do something like that, one of the recommendations is to think about that, right? Because one of the things is, um, you don't want to get into the loan and start paying interest on that money while you are doing all the architectural drawings and the permitting process and all that stuff. Can take, depending on the city that you are in, can take a month, 2 months, 3 months, I don't know. So depending where you are, right? Depending the how big is the city and everything. So unless you already have a team that can help you move quick in regards of drawings, getting permits and stuff like that, the best thing would be to start working on that prior to buying the lot, or maybe securing the property with a contract, and to buy, to close within 60 days or 90 days, something like that, so that can give you some time to start working on some of those things, and not to be paying interest on the loan while you're working on those things and the money is just sitting there, right? So, and so for that reason, is that way you can take advantage of the maximum leverage, right? It's 75, or we can push it sometimes depending on case by case basis, depending where you are and your experience. Okay. But either way, generally we use the lesser of the two, right? Whether it's the LTV or the LTC when we do the calculation. Okay. Now, the rehab or the construction financing portion of it, we fund 100% of the construction budget, right? So usually when it's a rehab, always 100%. Construction, always 100%, unless there is discrepancy there, or on the value, or um, uh, or it's very tight project compared to the after repair or after construction cost. Okay, so otherwise, but sometimes even if that is tight, sometimes affects the purchase side of it, not the construction side of it. The construction will always try to push it to make sure that you have 100% of the funds that you need to do the property, to build the property, or to renovate the property. Okay, so you can include all your soft cost on the budget, meaning that you can include GC fees, permits, impact fees, surveys, insurance, and a lot of other things, right? Sometimes survey, I did say survey, soil testing, and other things. Okay, multiple draws are available at your discretion. Obviously, usually the process of using the funding for the construction, the money is going to be sitting into an escrow account. So we do you will be drawing the money as you go along with the construction, right? So depending on the liquidity that you have, it will be how many draws you're going to need to do throughout the whole process. But yeah, we leave that at your discretion, whether you want to do one draw, two draws, three draws, or 20 draws. That's up to you on how you divide the stages, the different stages of your construction. Okay, so these type of loans are good, great actually for building single family homes, 2 to 4 units, townhomes, or even condos. Okay, so definitely reach out to see what type of property you're looking to do, so we can help you see the terms, the exact terms, um, and terms for that loan. Okay, now the this is just a summary of what we just talked about. 12 to 18 months, 50,000 to 100,000 minimum loan, $5 million, up to $5 million can go. Minimum credit scores usually required right now is about 660. No taxes required, no personal taxes, no personal income require. This can, you can close it under your company name, right? We usually recommend to have a specific LLC for these to do that project, right? And if you do multiple projects, we can help you understand how that can be structured. And again, this is only for infill um, lots, right? Or tear down homes where you can build another spec home in there, right? So if you're looking to do land development, if you're looking to do more than 5 properties at the same time, um, definitely reach out to me. We have a program for that. It's just not the one that we're talking about today. Okay, so now with new construction, right? So there is other things that you need to take care, which is your business, right? While you're doing the new construction, while you are going through the process of building a house, and you have obviously business expenses, um, construction expenses, right? And things that you need to pay in advance, things that you need to carry over, right? Or things that sometimes even material or things that you need to pay for um, prior to installing them, right? Or sometimes you just see a good offer and you want to buy those things for the property, even though it's not the time that you need to, right? And you know that you're not going to be getting that money back right away. Then you can use business lines of credit for it. A lot of our developers that we work with, they use business lines of credit to cover some of those expenses, the initial expenses of construction, permits, all the soft costs that we were talking about earlier, right? Like advances to contractor, permits, insurance, survey, any impact fees that you may need to pay, soil testing, any sort of testing you need to do. Um, and just getting the lot ready, right, to start building. Um, we do business lines of credit. We provide business lines of credit for seasoned business and brand new businesses too. Okay, so as long as you have excellent credit personally, then we can also fund your brand new company to be able to for you to be able to combine these tools and be able to go through the construction process. Okay, the business lines of credit usually they don't require any collateral. They report to the business only. Most of these lines they do not report to your personal credit. Some do, but most of them don't. They don't. We like to work with the ones that they don't. Um, uh, they don't require personal income verification or anything like that. You can use it for real estate or anything you want. There is actually not any no restrictions on how you can use it. Usually, we can get up to 150 grand, depending on your personal credit again. Okay, because if this is a brand new company, um, the company doesn't have any assets or doesn't have any income, then it will be based on your personal credit. It will be for your company, but it will be based on your personal credit. And then these fundings can be done within a week or two. And any startups are welcome for this. And again, these are unsecured credit lines. Okay, so no collateral needed. Okay. Now we also have what we call gap loans or term loans. Um, Gap loans or term loans, those are liquid cash, right? These are not the business lines of credit. This is just liquid cash. This is a loan, right? Cash loan that you can use also in combination with the financing that we give you for the construction. You can utilize it for, again, to pay all the stuff that you need to pay in advance, like contract or permits, insurance, all that kind of stuff, and even obviously the your company maintenance, right, and the day-to-day operation, right. No collateral needed again for these 5 to 7 years to pay. No restrictions on how you use the money. Use it for real estate or any other things you need. Up to $300,000. It does require a strong credit and strong personal income. Okay, these are more based on your personal income and personal credit. Okay, but these are great tools for you to use in combination with the financing that we give you, so that way you have some cash flow while you going through the construction. Okay. Again, it's quick funding. Usually takes anywhere from 7 to 14 days, and there's no prepayment penalties on paying these loans earlier. But again, these are loans that you can pay within 5 to 7 years. So, if you're building, this is better to keep that money rotating inside your company for operation rather than paying them off and then having to apply again for it. So that's why I like a lot also the business lines of credit, because the business lines of credit are revolving lines, and they start at 0%. Then after that, yeah, the interest rates are high, anywhere from 12%, 15%, 20%. But the thing is that these are made for short-term financing. These are made for you to utilize them just to go through the construction and pay them off as soon as you either sell the property or you draw the money out of the escrow. Let's say you pay for something in advance. Let's say you pay for your foundation of the property, and then in advance, and then once the foundation is completed, you can draw that money out of the escrow and pay for the credit card on the things that you pay for in advance, right? So again, so these are made to be used short term, not to hold debt long term. Okay, because they're expensive. So the same thing with the loans. They're usually high interest, but either way, you can pay them off quickly if you want to, or you can just keep rotating them, and you'll have a monthly payment. Okay. Now, we also offer financing for commercial properties, anything for, fix and flip loans. These are for quick renovations, right? Rental properties, BRRRR method that you said, those guys that buy properties, renovate, and keep them as a rental. Multifamily loans, anything that to buy multifamily, renovate multifamily, and then just keep them as a long-term rental. We can help you with the whole process. Okay, acquisition, renovation, and then holding long-term. Okay, bridge loan. These are for properties that you're flipping quickly, or you need to hold for a short period of time until you're doing something else. And then new construction, the one that we just talked about, commercial loans for anything over 5 units, or even offices, strip mall, anything buildings, anything that you're looking to do on commercial, we can help. Business loans, the ones that we were just talking about, there are different type of business loans, just whether your business is being working or been in business actually for a long time, and your company is making money. That's one way of getting business loans or business lines of credit based on your income, company income, and assets, or the business lines of credit that we were talking about for new companies, okay, or real estate companies, okay. And finally, we do these nationwide. So any state except for, I believe, North Dakota, South Dakota, and Vermont. Those are the only 3 states where currently we're not working. But any other state, feel free to give me a call, send me a text message, or send me an email. Contact me, and I'll be able to help you with any of these projects. Okay, we love doing these projects. We love helping developers and new investors and seasoned investors on these projects. So feel free to reach out at any time. Okay, here's our information. Just get in contact with us and talk to us. Either call me or text me at 312-529-0545, or simply go to nationalprivatelending.com to see some of these products, more information about these products, or you can reach me directly at christianarce.com. All right. Thank you very much, and I hope to work with you soon.